As we creep ever closer to harvest, grain markets have eased from the support levels seen in the wake of the coronavirus pandemic and the protectionist measures introduced by different nations. In spite of cuts to expected wheat production in the Ukraine, EU, and US year on year, major exporters' stocks to disappearance levels are in fact expected to rise year on year, although not to the recent highs. A large part of this rise is due to a move higher in southern hemisphere wheat production, with a resurgence particularly seen in Australia. Looking at the global grain stocks to use level, excluding China, we're also expecting to see a recovery. This is in part due to the last disruption caused to maize demand and ethanol demand by the coronavirus pandemic. We are beginning to see a return to production of ethanol in the US, but it will still be some time before we see a true return to consumption at pre-pandemic levels. In response to the increased wheat and maize stock levels, we've seen global prices retreat, and this is a trend we expect to continue seeing. So, the all-important question: what does this mean for your UK grain price? We're edging towards harvest with a very mixed view of output. Obviously, we had the severe rainfall over winter and then the dryness over the past couple of months. And while some of you will have received much needed levels of rain, some of you will have received too little. From a crop production perspective, the outlook remains for a tight wheat crop and a larger barley crop. Wheat prices will remain capped at the import level and as such will be responsive to moves in the global market and importantly currency. From a barley perspective, prices will need to remain competitive into rations and into the export market. You can stay up to date with all the latest market analysis on the AHDB markets page without the need to register or log in.